What's up everybody, Nate here, and the last 2 years in the United States have been a very interesting time. An interesting time for the stock market, for money printing, business, and of course debt. But with all that being said, there has been a ton of money circulating throughout our economy since basically the pandemic started. And what that basically means is trillions of dollars have been spent over the last 2 years. More money than we have seen in a very long time. And with all this free money circulating throughout the economy, you'd think Americans would be using only that. Well, if that's what you think, then you are wrong. By December 2021, US household debt hit a new 17-year high and is now sitting at over $14 trillion. So Americans have been spending more, but they're also getting into a lot more debt than we have seen in a very long time. Debt for the majority of Americans is not a good thing because that means they owe someone a ton of money, which means their spending in general is restricted. And with debt growing at this fast of a rate, well, that could basically lead our economy into an impending doom by the end of 2022. So today I want to talk all about Americans getting back into debt, where all of this new debt is coming from, and what this could all mean for our economy in 2022 and beyond. So if you like this video, then be sure to destroy that thumbs up button below. And as always, hit that notification bell too. Both of those things are completely free and they show me that you like this video and you want to see even more just like it. Thank you so much for doing that. Now let's talk all about debt in the United States. So debt has been a big problem since, well, I've been alive. And debt in a traditional sense means that you owe someone because you borrowed money in some way. And debt usually comes up when Americans make big purchases, but not necessarily. Credit card debt is also a big problem in the United States because it seems so easy for a lot of Americans. They take that money and they see it as an extension of their own dollar. So if you have $1,000 for something and something costs $2,000, well, you put down $1,000 and then you buy the rest of it for $2,000. You also overspent because now you just spent money that you don't have, and eventually you have to pay it back. And that's kind of a luxury that the United States has because you're able to pay this money back in monthly payments. And it's a way for companies to make a lot more money because before, if you didn't have the money to buy something, well, you were screwed. You couldn't go out and buy that thing. Now, these credit card companies and financial institutions will say it's okay if you don't have the money to buy it. We will give you all of the money that you need up front, and then all you need to do is pay us back with a little bit of interest. This interest is how these financial institutions make money on a loan, because think about it. If you borrowed $5,000 for a brand new car and you went to a bank and said, "Hey bank, I need $5,000 for this new car." And they said, "Okay, here's $5,000." And the bank wouldn't really be making any money because all you're going to do is pay them back that $5,000 and they're only going to be ending up with $5,000. So what these financial institutions do is they tack on an interest rate. So the interest rate is going to be assessed every single month or sometimes yearly, and you're going to have to pay an additional fee for borrowing that financial institution's money. This in itself creates debt, and it keeps a lot of Americans from doing the things that they really want in life. Now, I would like to mention here that debt is a very complicated issue, and it can actually be somewhat beneficial for some investors if you use it in the right way, because you got to think when you buy something with debt, you're not using your money. You're using someone else's money. That can have a lot of pros and cons, but for the average American, debt means that you're constantly making payments to someone after you have already bought the thing. And debt has been very interesting in the United States over the last 2 years because when the pandemic first started, Americans were in debt. But the Federal Reserve and the United States government decided they needed to print trillions of dollars in order to lift the American economy out of the pandemic and an impending recession. Printing all of that money meant that Americans were going to be able to buy things even though they weren't working, because remember, when the pandemic started, nobody knew how long businesses were going to be shut down for. Nobody knew how long social distancing orders and economic lockdowns were going to last for. So the United States government gave people money, and they gave gave people money for a very long time, almost 2 years. Money in the form of direct payments to Americans. So sometimes these were thousands of dollars in checks that you could basically spend however you wanted. You also had programs like extended unemployment benefits that came from the federal government and gave people additional dollars on top of the state unemployment benefits. Then you had things like the Paycheck Protection Program, which was for businesses not firing people. If they kept employees for a certain amount of time, then they were given money by the federal government that was supposed to recoup some of the losses that they were going to incur from the pandemic. And then you had the pause on mandatory payments for federal student loans, mortgages, and rents. So this kind of created an interesting issue in the United States because on one hand, Americans had a ton of access to money. The Federal Reserve lowered its benchmark interest rates to 0% as well, so people could go out and get loans to buy things that they wanted. Remember, when you get a loan, you are immediately in debt, even if it's just a small loan. You owe somebody money, you have a debt to pay. So that's the kind of first interesting issue. And then the other side of this is that Americans now have a ton of money. So what a lot of Americans did was put this money aside or pay down thousands of dollars worth of debt. In prior years, Americans took on a lot of debt, so when the United States government gave them thousands of free dollars, well, they went out and paid off a lot of that debt. That's good for Americans because now they're free up to do more with their paychecks every single month. But on the flip side, a lot of Americans went out and got loans with interest rates so low they could get a mortgage at a record low rate. A lot of Americans could afford a mortgage that they might not have been able to afford before. So now you have millions of Americans going out and getting mortgages. You also have millions of Americans getting auto loans and millions of Americans financing pretty much everything because interest rates are so low. Sure, interest rates are low and it may only look like you're going to pay just a few extra bucks a month because you borrowed money, and think about the return here. If you go to get a brand new fridge, for instance, and that fridge costs $1,500, with interest rates super low, you may not have to put down any money in order to get that fridge. You can actually finance that fridge and only maybe pay $50 to $150 a month. But the problem this creates is it might look like a small amount on the surface, but if you combine this with getting a mortgage and getting a new car and getting a new fridge, well, now you're paying hundreds of extra dollars every single month. So that essentially freed up millions of Americans to get back into debt because they had such low debt because they just paid it all off. But now this has some seriously bad implications for our economy in 2022 because debt basically controls how a lot of people can spend. You have to pay your bills and your debt first before you can buy anything. And if we have an entire American population that is way in over their head in debt, well, they're not going to be able to buy anything else. You see, the way our economy works is by people spending money. So the more money that we have in circulation, the more jobs can be created, the more businesses can grow. Of course, you don't want to have way too much money circulating because then you have inflationary problems. We saw inflation hit a 40-year high back in December 2021. And every key inflation gauge since has showed inflation is only going up. This is because the Federal Reserve printed so much money and Americans had so much access to it. They went out and spent this money, which created supply chain issues and inventory problems, which meant that workers now had to be paid more so that they could afford all of the new prices. So Americans do need to spend some amount of money, but here's the issue. A lot of Americans over the last 2 years have gotten into a lot of debt. They were able to buy a house, they were able to get that new car or anything else that they needed because interest rates were low and there was a ton of free money in our economy. Not only that, there was a lot of reasons to spend money because you weren't spending it on some other things like student loans and your mortgage. Now though, we've ran into a little bit of an issue because federal student loan payments are scheduled to resume in May 2022 and the mortgage moratorium and rent programs are starting to end as well, which means millions of Americans are now going to have to recoup a lot of those payments. But Americans had a lot more money in 2020 and in 2021 because of all of the money printing. printing. Now that those payments are starting to be realized, Americans don't have money for them anymore. So what is the solution? Well, Americans can make more money. One of the ways that Americans make more money is by getting a new job, a job that pays you significantly more than your previous one. That has been one of the contributing factors to our Great Resignation and labor shortage issues in 2021 and now 2022. Americans have been quitting by the millions because they want more money, better working conditions, and better benefits from a job. All of this is in response to things costing more and them having to now make bigger payments on their debts. A lot of Americans actually didn't even have to work in 2021 because they didn't have a lot of debts, or their debt payments were essentially paused. But now that those payments are starting to come back and you have to make payments on them again, well, now Americans are in a tough position because they've put on all of this debt and now they're going to be losing money. And ultimately, if Americans are having to only pay and buy things that they need, well, that is going to cause our economy to shrink. You have a bunch of contributing factors towards a shrinking economy right now. You have inflation, so things are naturally just starting to cost more throughout the United States. And you have all of this debt that Americans have taken on and now have to pay back. They can't just buy whatever they want anymore, they have to pay down that debt. So like I said, the first thing you do when you get paid is start paying down all of your expenses. And then you have money left over. And if Americans don't have any money left over, then that could lead us into a recession. Americans not buying anything means that businesses aren't going to be able to pay their current employees. They're gonna have to start downsizing. Downsizing means that we're going to have less supply because there's less demand and ultimately less money overall. It could also lead us into a massive default problem because if Americans are way too over their head and they're not making enough money in their wages to cover inflation or their debts, then they're going to start defaulting on loans and going into bankruptcy. That could lead us into a massive bankruptcy crisis in 2022. Now, this problem is already starting to happen with the housing market. I detailed this and made a full video on this problem about a month or so ago. And if you want to watch that full video, I'll leave a link to it in the description below. But basically, because of all the forbearance in 2020 and in 2021, Americans didn't have to pay their mortgages, but now those mortgage payments are starting to come back. A lot of Americans are not prepared. They're going into foreclosure on their house. Now, going into foreclosure is bad for everyone in the entire system, and it trickles down. It's bad for the people because now that's going to hurt their credit, which is going to hurt them getting new loans in the future or getting any type of money from a financial institution. Not only that, but they won't have a place to live anymore, which is kind of a necessity in our society. And of course, they won't have any money for all of their everyday necessary items like food, water, clothes, etc. So that could devastate millions of families throughout the United States. But that also trickles down to the financial institution because remember, when you borrowed all of that money, you borrowed it from a bank or a credit union. But now they're not going to get any money for that loan anymore because you basically are going into foreclosure. You're defaulting on your mortgage. And the bank is basically going to be left with a house that they don't really want. They're going to lose that hundreds of thousands of dollars that they gave you. They don't hold on to that hundreds of thousands of dollars. They actually use that money on the New York Stock Exchange and bundle all of those mortgages together and sell them as mortgage-backed securities. So if we start to see foreclosure after foreclosure, well, that's going to be bad for banks. It's now going to be harder for a bank to give other people a loan because they are losing money. They got to get a little bit more strict, which means their interest rates are going to go up too. And not only that, mortgage-backed securities on Wall Street are going to start dropping as well, which is the exact problem we had back in the 2007-2008 financial crash. This problem could extend to other markets like the auto market or the financing for a business market. Pretty much everything is going to get affected because banks banks are starting to lose money. But not only that, but millions of Americans don't have any money either. So this issue could cause our economy to decline even further. And that is all coupled with, again, inflation and the Federal Reserve raising their benchmark interest rates. So they lowered their interest rates back in 2020 to incentivize people to spend, but now people may have overspent. Now they're paying back all of that money, but they can't get any more loans because the Federal Reserve is raising their interest rates. Spending is going to go down ultimately throughout the country because people just don't have the money for everything right now. And unfortunately, these problems are most likely going to get worse before they get better, because Americans, when they get nervous about not being able to make their bills and not having a lot of money, will start using credit cards, which again, a lot of Americans see as an extension of their wealth. Americans will start using their credit cards to pay down some of their bigger debts, but eventually, all of that money is going to run out too, and they're going to have to start paying that down. It becomes this debt mountain for individual Americans who just cannot pay it off. So is there actually a solution to this debt problem for Americans? Well, like I said, one of the solutions for Americans is to find a better paying job. A job that's going to give you a lot more money so that you can pay down your debts. But this is only part of the issue. The bigger issue is a lack of financial education and literacy in the United States. The majority of Americans don't really know how to use their money. That's why they're in such crippling debt to begin with. Americans constantly take on way more than they can handle because that is the status that Americans want to live by. They don't care how much it costs, they just want the fancy thing. That's how it's always been, and that's probably how it's always going to be. Americans want to look rich instead of being actually wealthy. As long as you have that problem and that ideology in the United States of buy now, pay later, then you're gonna have debt issues. And I'm not saying that Americans shouldn't buy things. I'm not saying that Americans shouldn't get a house because they don't have hundreds of thousands of dollars to put down right now. What I'm saying is that Americans need to be able to afford something fully before they actually buy it. I mean, if you're buying a house and it costs $100,000 and you have $0 to put down, well, that is a bit of an issue. You're now financing 100% of it. You probably shouldn't have bought that house. But if you're able to put 20 to 30% down on the house, well, then those are going to be manageable payments for you as long as everything else in your life you don't finance. So what I'm saying is that even if Americans start getting better jobs that pay them more, well, that's not going to fix the issue because eventually their ideology and culture is going to set in and they're going to overspend their means again. They're going to need a better job with even higher pay. And this can go on and on forever. That's why we often say it's not about the job or the money you make, it's about what you do with that money. The majority of Americans could invest a lot of their money, and a lot of them did in 2020 and in 2021. That's part of the reason why we saw the stock market hit record highs both of those years. Americans were taking this free money from Uncle Sam and then investing it to make even more money. That's a trend I think we'll continue to see, but that's definitely not the majority of Americans doing this. But I think right now, in order to stop the bleeding, Americans need to be honest with how much they make and how much they can actually afford and stop buying so much, at least in the short term. They need to pay down the majority of their debts before they can start buying even more things. That might lead the economy to start shrinking, but it also will mean that Americans are wealthier in general, which has longer lasting benefits for our society than people just being in a ton of debt. But honestly, as far as I'm concerned, debt like this and like we're seeing creates way more problems than it's actually worth. And if you couple it with the other problems that our society is facing, well, we're going to have some serious issues with our economy in 2022. But honestly, nobody really knows for sure because a lot of things could change in our economy between now and the end of the year. Our economy is super complex and there is a ton of moving parts. I don't have a crystal ball, which means I can't tell you exactly what is going to happen. But all I know right now is that Americans are in more debt than they've been in a long time, and it is not looking good. But now I want to hear from you on this issue. What do you think about this American debt problem that we're facing in 2022? Do you think that this mounting debt is going to cause a recession in the United States this year? Or do you think the majority of Americans are going to start becoming a lot more financially educated educated and start paying down this debt so we can avoid problems. As always, leave a comment below before you go. That is it for me, everyone. I hope you liked this video, and if you did, be sure to hit that subscribe button below. Be kind out there, and I'll see you all in the next one.